recording. All right, we're recording. I forgot to press before, but we started. So anyway, going back to this daily candle held the daily 20 MA. It's key for uptrend. We tend to hold this, and then if the daily 20 holds, it gives us a lot of nice continuation for the uptrend. We do have some inefficiencies on the sell side because of today's candle, not leaving some stuff behind, but the like I said, if we do end up going higher in the next session, I'll be watching these key levels, which are the Monday lows, no, Tuesday lows. I'm sorry, the first day of the year lows, and the I'm actually gonna change this color right here, and the daily 20 as of for the overnight. So let me change this real quick. Let me put white right here, boom, like this. And then we're gonna change this name to proper structure down. So basically what we have, what you like to see on daily candles or any type of candles for proper structure, to have any candle that takes out like one extreme and leaves the other extreme very far away. The next candle, if it's gonna have continuation to the downside, should go up into the low of this candle right here, like this, and then reject down, right? So that will leave a wick on the candle, and then we have a continuation lower. So that is proper structure, and that level is 47.65. If we end up having that, then we have a strong rejection at this level, then I'll bet down on, I'll try to fade that rally if that's the case. If we end up going over it, it's not necessarily over to the downside, but I think the odds are increasing to the upside at that point, and especially because we held this. You gotta think about how this low that was placed right here, and how today it came down just to take it out for a small second, I believe. Let me see on the 5 minute. Yeah, we just took it out for a small second. That I don't know if you guys, there's any ICT traders here, but or smart money concepts, but that's basically what is called a grab on liquidity. So meaning that it's just gonna, there's a lot of longs that are building during this area, and what they tend to do is basically have their stops at the last swing low, because you're supposed to, like, if you spot something like this, traditional trading or anything that you're taught on for retail traders will tell you to put your stop just slightly below this. That way your risk is very limited, because once you break this, instead of having a series of higher lows, now you have a series of lower lows. But since it's a small poke and a bounce immediately off of it, it does represent a grab of liquidity. I'm not sure if it grabbed enough liquidity, being that quick or that little bitty poke, being so small. But it definitely took out the stops that were below this level, right? Any stops that were one tick, 1 point or so below this. This is around 44, the low right here, 43.25, 47, 43.25, and we went as low as 41. So at least two and a half points this thing dropped, or a little more, right? So it took out those stops that are very, very close. Now, would that be enough liquidity to go higher? Maybe, right? Maybe that's enough to do it. And like I said, that will be bullish if it does. The daily 20 held, and that will go up. Like, we're still extending from the weekly, and if you look trends to, let's say, something very bullish back in 2020 or so, what was holding the trend back then was the weekly 20. So pullbacks will be deeper than that. Let's look back a little bit. Well, like, was it 4 years ago? My God, I can't believe it's been that long. But the daily 20 represented a lot of the lows. The market will go up, it pull back into the daily 20, will go up, it pull back. Those deeper pullbacks that you see into the daily 50, this blue line, will actually, if you go back to the weekly, will represent the weekly 20 MA. you know so the market is, you get a very good dip to buy whenever you're close to a weekly 20, and as of this moment, we're far from it. Okay, we're far from it. And this little gap that you see is because of the contract change, but regardless, we're still far from it. So can it mean that we can have a deeper pullback? It could be. It could be one of the thesis that we had on the that we've been talking about since the beginning of December on the VIP room is that the first quarter of this year could be bearish. According to if you base yourself on tax moves, you try to compare the action that we had in the beginning of last year. Well, actually, at the end of the 2022, which was a bearish year, we saw some sell side activity into the end of the year because it's a lot of it has to do with tax harvesting. So if you are a hedge fund or just anybody with a portfolio and you join the year at some point on the charts and then you end up on the red, right? You gonna go harvest those losses, at the before the year ends. That way they're gonna pay for the taxes of the wins. They're gonna overtake the wins that you have on all the places, and you're gonna contract that P&L. And then when the year starts, which will happen on 2023, it's basically that's when the buying starts. Modal, your mic is open, right? And that's why if you look at the yearly chart, sorry, the weekly chart into what happened from 20 at the beginning of 2023 is basically the low of the year. What happened right there, right? We had a run up at the beginning, a pullback, didn't make a new low, and the buying kept continuing, right? Deeper pullback and then buying into new highs. So the thesis is that now that the tax harvesting has been done, people can buy back into their positions. You're gonna see stuff like Tesla, Amazon, stuff like that. They bottom out at the very beginning of the year and they start going higher from there. You didn't see the lows again. So that's kind of the idea now. The first quarter could be bearish because the all this that bought for all of these gains right here, they could be they're gonna enjoy at this point long-term capital tax gains, right? I'm sorry, the tax rate for long-term capitals, meaning that if you hold more than a year, you only pay around 15%, I believe, if I remember correctly, 15% on taxes instead of like your normal tax rate if you do short-term capital gains. So all these loans that built last year could see profit taking for now that they're taking advantage of that tax year at this first quarter, right? So let's keep that in mind. Doesn't mean that the year is going to be bearish, but let's keep that in mind. Then that's a theory. That's just a theory. Now it's not that it's going to happen, but it's based on on tax loss harvesting and then getting those long-term capital gains. So we got that, and then also let's remember that the daily trend could be held at the daily 20. So we'll keep that in mind. All right. Next up, let's go down. Like I said, if we end up having a bounce off of the daily 20, use a fib from this leg lower for any possible lower highs. If this happens, if this end up holding, if we don't, it's just a liquidity grab to go higher. My aim will be towards any kind of fib retracements anchoring from this high to this low. So any loan setups will be targeted into 47.79, 47.91, and so forth. Okay, that'll be the idea. All right, and also, yeah, we almost came close to this level right here, which was a breakout retest. This high right here, we almost came close to it. So there's the possibility of dropping into this low to test it and then bounce. Okay, so keep that in mind as well. Going over to NQ. Real quick. All right, it's a lot of lines. My apologies if this is a little too blurred for you guys. I need to get rid of some of this stuff. I'll do some spring cleaning. Spring is coming in, so I'll do some spring cleaning soon. So going back to the same idea of having proper structure to the downside, yes, during this whole downtrend, it did have it, but not on NQ, meaning that we have a fair value gap right here on this area, and then we have a fair value gap right here on this area. So I don't know if NQ is gonna go and fix those inefficiencies. We also have fair value gaps below on the buy side, and there's just too many up and down. So I don't think I want to base myself any trend decisions off of that. One thing to notice is that we do have a loss of the daily 20 on it. So it actually kept the trend higher back in the last consolidation pullback before this run up. But this time we're trading below it, and it actually closed below it. So that's a bearish sign. That's a bearish sign. We also want to anchor our fibs from the last leg higher, like this, to know where we at, to see if we can have any possible bounces. Because at this point we're at the 50% retracement, and if we end up going lower, we can actually go and try to aim for that 618, which is all the way to 16,400 or so. So that's a big possibility. I do think like we're gonna mark this level right here, which is another possible that could be our test for a high before a drop. Proper structure. Yeah, we're gonna put this right here. So this is a possible setup that I see happening where the market pumps up into this Tuesday lows, and then continue its downside. So we're gonna look at that possibility. If we end up having a daily candle that goes and takes out this candle high, then I'm gonna be betting for the upside. Same idea as ES, where you place your fibs on the other side, something like this, something like this, where my upside targets are gonna be any fibs starting and anchoring from this highs to this lows. I highly doubt it. I mean, this is indication that we should keep betting lower on tech at least. But that's lately I find myself doing better longs than shorts. So like today we had a bearish day, right? We had a bearish day. There was a good opportunity shorting Tesla and some other names, but we actually took a long on Zen for the VIP room. We pulled a 200% gainer on Zim. So even though that the market is bearish and you may see continuation to the downside on tech, if you can spot a daily candle that can expand to the upside on some other names, doesn't have to be tech sector, I think it's a good opportunities out there. This was a good flat consolidation pullback into a daily 20. Bullish candle above it, and then the next one, this is number one candle of breakout, and the next one we took out the prior day's highs. He actually dipped a little bit below, but that was a good as candle right there, good as candle. So we're trying to find those setups right now. We're trying to find those setups regardless of the what we think of the market direction on big tech is going to be, because there's some stuff that to me is not tradable. Apple for example. Apple, for example, is not at a key level that I want to watch. It had a downgrade. This is a huge move down. This is interesting to watch that all this consolidation area got taken down just with a downgrade. And I don't really know what this. We should have seen this candle, this little doji candle with this huge volume as a sign that the option was over on Apple. I missed that. Whenever you see a big volume bar like this and a little ass candle, it means that there's just a ton of sellers that met the buyers at that point. It's meaning it's apex at that point. Modal says this is the daily. Yeah, try to check out. This is where you can see the time frame daily right here. Yeah, you want me to show the Zim chart again? This is a good case study, guys. This is a good case study if you guys want to spot stuff like this. This is, my bread and butters on this on my trading career are options where I can spot daily expansions. You know, I don't even care what happens intraday. What I look for those candles is like, what, how can I imagine the next candle to be? And I can see Zim going a little bit higher into this area. I can see Zim going a little bit higher, but betting even more than this will be hard. Maximum, I will think that it goes and fills this gap right here. Maximum, I will see something like this. But the reason is, you gotta think about how many candles can a breakout occur. How many candles can it take for a breakout to occur? And just go back a little bit. Take this as an example. We are not gonna take this first green candle as a breakout because it was still in the consolidation area. But let's take this one. 1, 2, 3 candle. Boom, to the highs. That's it. And then pull back consolidation. You get this one. You get a breakout out of this area. It was only one candle. So on this one, we got 1, 2, maybe 3. But this is what I'm saying. If you are past the second candle, you're asking for too much. Things are not gonna go up. Well, sometimes they do, I guess, but more often than not, things are not gonna go up in a straight line. Okay. I get surprised whenever the market does go up like that. But for this example, you have a 2 down, 2 up, a day that opens on a gap, attacks the prior day high, goes and closes bullish. The next day you open higher. You use the same idea, right? Same idea. Prior day high tag, prior day high tag. It went a little bit closer, but whenever the candle is very bullish like this, and the close, because the close can always be a test. For example, here, it could have dropped below and then test this before going higher. But it's too much, risk, right? You buy right here and then you have to hold it all this red before it bounces. So you kind of want to use that thesis that is gonna hold the prior day close or open if it's close to the prior day high, or if it's bullish, right? So meaning, like, if it's right here, I don't care about being red for this little bit much, because it's not a lot, right? And is it prior day close? It goes tested and then goes back up again. It's all right. It's all good and dandy. Our targets are much higher anyway, right? So this was a good gainer. It was a good gainer, and I'll actually, one of my best gainers last year. I was looking through some of my last year P&Ls, and that I was doing my recap of the journals and everything. This was one of the best trades that I had on Zim as well, and this was, I believe, we had a downtrend right here represented by this trend line. We closed a candle above it. The next candle, we took a long somewhere around this on the test of this trend line right here, which it was around 22.53, and then ended up going as high as 24. It was, if you look at it, it's $1 and something move, right? It's not a lot, but on options that are out of the money, that are worth very little, this was a huge move on them. I remember it was like I think it was a 300 or 400% gainer. And because it was a 20 something dollar stock, at that point, it's the options move a lot better the higher the stock is. That's why I don't trade anything below $10. They're just not worth the. And this one barely made the threshold, to be tradable. It was above $10 already. So yeah. So enough rambling. Enough rambling. I hope that answers or teach you something about Zim. That was a good ass trade. That was a good ass trade. And I show you something of the intraday management that we had, because we bought around right here, right? So whenever we saw it going up like this, and then the pullback, I was ready to call it quits. Actually, I was ready to call it quits, because when it was pulling back right here, the premiums were still high enough from our entry that I wanted to take advantage that they didn't decay or that they held volatility in them. Sometimes I you like to do that, because once they do not hold volatility, your contracts are gonna they're gonna go down a lot. So it was still holding, and this candle right here that you see, that the lowest candle of this pullback, poke a little bit of the 6.5% retracement. So every time we have an opening range, I like to place my fibs of the lows and highs of the opening range. And this candle is slightly. I was just telling on voice on everyone, like be ready to cut this trade, because at that I ended up taking profits at 40% somewhere right here, and then went up as of 90 something percent at this point. And now I didn't take any at that 90 something percent, because I had higher targets, right? And then whenever it was pulling back like this, I was like, oh man, I should have taken at 90 something percent, especially because I had orders at 100% gain to take, but they never trigger. And later on, I removed those orders and I went for higher percentage numbers. But whenever I saw this, I was like, holy shit, we're about to just lose it. But then it just bounced. When I opened my mouth and I said that, boop, it just went up like this, and I was like, okay, let's be patient, let's hold it. And he ended up paying really really well, right, later on. So he met the first target, second target, and a little bit higher than that. The next target is way higher. So we were still trimming along the way. At this point, I just have runners on this trade, but that was some very good management, good entry, good hold through this, good hold through this, and then we took an exit right here. I thought it was great because I saw this pullback, and then I saw when it kept going higher, I was like, holy shit, I should have kept my old position, but you never know, right? I can detect how much I can lose on a trade, but I cannot detect how much the market is gonna give me on a trade. That's a different. That's different, That's different. We don't know what the market's gonna give us. So that was that recap. That was the only trade. No, actually, we took this trade, and we took an SPX call. We took an SPX call, and I don't know if anybody saw my alert, but it was around this low right here. I was checking internals on that trade at that moment, and everything was pointing for possible reversal, possible reversal, and we ended up getting some good percentage gainers. It came back and didn't get my stop. I thought at this point was gonna get my stop, and then we got our next exit, and I did not take part of this. Whenever we had this pullback, I got out of my position. I only had three contracts, so it was one trim right here, one trim right here, and then one the last trim right here. So I didn't get to see how much it was at this point. But good trade nonetheless. Good trade. That was a that was a good setup. That was mostly looking at internals, if I remember correctly. Yeah, yeah. The market was overextended at that point. The ticks were inverting to the we're not holding to the downside. They start flipping to the upside. If you guys can see right here, this was mostly the reason of this trade. This candle right here, when a up, changed the whole tick area right here, because they were very bearish at this point. Ended up going even higher like this, and then the next candle gave us that upside. So that was mostly based on that. It's a good trade. Can I elaborate what I mean by looking at internals? Yeah, I have a series of internals that I look at. This is the tick. You can find it on TOS as dollar symbol TICK, but you can also find it on TradingView as a cumulative tick or something like that. And yeah, that one, and also part of the internals. This takes a lot of screen time, guys. I have a lesson. If you guys can look at my YouTube channel, I have a lesson on internals. It's on the resources on the VIP room as well. This basically represents the intensity of the selling versus the buying. And you have a string ticks right here. You see the cumulative on the little triangles right here. And basically, it's like the heartbeat of the market. And by screen time, you can analyze like, okay, there's some anomalies right now happening, right? Like buying is not being sustained, selling is not being sustained. You can take the other side of the trade, so on, so on. Okay. And part of this is just one thing of the internals. There's another thing called ADD, which is basically the New York Stock Exchange stocks that will tell you if they're positive or negative, you know, if there are more stocks going green than red, and so forth. We also have bold, which is the volume going in or going out into red stocks or leaving, I'm sorry, leaving bearish stocks or going into bullish stocks. And we have a ratio that is represented on the NYSE and then on the NASDAQ, which are two different ones. And you'll see at the end, you know, there was a ton of selling activity, a ton of volume coming into the sellers. And then we have a negative ratio on both and on this session, on today's session. And we look at the dollar index, we look at the VIX volatility as part of the internals. There's a couple of internals I don't look at anymore. And the last one, and one of my favorites, is this indicator right here that I have. This is the SPX 5-minute chart. And over here, you can see this set of bars versus this line. This indicator tells me if the sectors are bullish or not, right? So it's to give you context, and sometimes it'll give you a signal of going long or short. And yeah, it's been a minute. Nice to see you, Jolts. Nice to see you. Um, yeah, the basically the bars will be the heavy-weighted stocks. So technology and discretionary, and I believe financials is as well. And the rest are the line, which is staples, industrials, materials, utilities, you know, you name it, the other stocks. So it does, you know, it helps you a lot on days like something like this, you know, like the yesterday, where the market was very bearish on tech. You could see it on NQ being very, very bearish. You could see them those sectors being on the other side, but you see the discrepancy between those being so separate from each other like this. The line being so separate, it means that the rest of the market was not bearish. You guys saw those stocks, you know, Pfizer, Moderna, Johnson and Johnson, CVS, a ton of the healthcare stocks, and staples were going to the upside. CLX, you know, Walmart, they were going to the upside, and that's why you can see it on through this line. But then there's other days where the market's correlated, and you'll see the line going with the bar. So this indicator helps me a lot. And if you're using Thinkorswim, I share with part of the VIP members. If you're interested on this, it helps you whenever you train SPX and stuff like that. You don't necessarily get like, oh shit, we crossed it, it's a buy. Oh shit, we crossed it, it's a sell. But it's basically like if you want to piece the information together, right? Of internals, okay, wait, I got the tech going doing this, I got this indicator doing that, I got the this other internal doing this, and then we're also doing this on this daily level. Boom, let me get into a trade, right? So there's that. I believe, let me check. What is this level where we took this trade right here on ES, where it's around 47.47. I believe that was the daily 20. So it was me. This trade was me. Let me see. Yeah, 47.48, 47.47 or so. It was the daily 20 at that point. So when I took this trade, it was basically, okay, I'm seeing if it's a daily 20 MA bounce. I see a difference on internals. Boom, let's attack this, right? Let's go for some SPX calls. I wish this trade would have been a better bounce. But as of this moment, like I said, that was a good bounce right there. You know, that was a good bounce. That was a good trade. Gave us 80%. Probably gave more. I don't know. It went higher, but I didn't have it at that point. But I mean, it was a good as trade. Good as trade. And I'm sorry. No, this gave 200%. Forgetting my trades today. This gave 200%. So, you know, if this had been a very, very bullish bounce, we would have seen north of 600%. But you know, that was me hoping, but we don't know what the market's gonna give us again. You know, we know what we can risk. We don't know what's gonna give us. So I don't know if you remember yesterday. I posted a QQQ trade as well. A QQQ trade, and that was yesterday. It worked, but I believe it was right here. I believe. All right, and I want to pay. I want you to pay attention to why we got this trade right here, because we got this trade on QQQ at this moment. Yeah, around here. If you notice, it's also a daily 20. This is a daily chart on the bottom, and this is the intraday. If you notice, we got this QQQ calls right here. I know it went lower. It went lower today. This was specifically for a swing, and we got a 40% gainer on it. But remember, one of the rules is like if you go above 40%, 30% plus, you gotta move your stops from what you originally have into entry. So we got a good trend right here, but I expected more. It didn't happen, so whatever. And it came down and took the rest of the contracts break even. But it was a good trade, and it was the same idea as today on SPX. We may not get I mean the bounce into new all-time highs, but at least we get a good initial reaction. That's what happens, a good initial reaction. Those some good trades, right? I mean, I wish I could catch a big ass 10-point day, right? But yeah, a few points here and there, a good dollar on QQQ will do wonders. Yeah, we only got a 40% trim off of this trade. And then obviously you get stopped down and you don't swing it anymore, because it was, to me, the idea was like, okay, if we go bounce at the 5-minute 20, I mean, I'm sorry, at the daily 20 and close the candle green or at the prior day lows, then the next day, let me see if I can get even more off of that. It didn't happen, right? We will move on into the next trade. Um, all right. So time for you guys to put in the setups that you think we can are in play, and we can check it out. If not, what I'll do in the meantime, I'll show you about oil, and then we'll talk about UNG and Boyle as well. But if you have something there, oh, XOM. Well, we're just gonna jump into oil right now, Model. So let's look at oil futures. Oil futures, my friend. I think oil futures are good for some upside. Now, this is a, sorry for all the mess on the charts, but at least on the daily, focus on this one. So we had as of this moment, this candle, it's a higher low. It's a higher low that is taking out basically two, almost, I mean, it didn't take out this high right here, but two trading sessions in one candle on the green side. So I think oil may be placing some type of bottom for a move higher. I don't think it's seasonality on this. I'm trying to see if the weekly, as you see right here, will end up going taking out this high. So short term right now on the daily, we may see another green candle on oil. I don't know if it's gonna go anything past another green candle on oil, but I can see another one. You know, I can see another one doing, even though it's at the daily 20 and close below the daily 20. But I think his candle was very bullish. This action today, if you look at the day, we barely had any pullbacks. We barely had any retracements. It was full on bull from the start, you know. So that's the candle on oil futures. And also I went to put gas today, and I paid $3 at the fucking pump. I know it's nothing for you Californians, but here in Texas, that's a lot. And and that was so weird to me, because last week I put gas, and I'm pretty sure it was 60 cents lower. So out of nowhere, you know. I mean, gas prices are different from the oil charts, but I just I just had that little point right there. So given that on oil futures, let's look at XLE real quick. The whole sector on energy, and this is what I find interesting right here. So our candle today, we have two daily candles that hold the daily 20, and today the lows was basically a little bitty tag of the daily 20, little bitty tag and bounce. Not only was the daily 20, but also a very key level as well, I believe. I don't know if you noticed this level right here, this 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 right here, and the low of this session ended up being this level right here. And I didn't place it today. Is that level's been on my chart for a while. I haven't even charted the XLE for a while. So this is a very bullish candle that ended up closing above all this action right here. So the whole energy sector is looking like it wants more upside than that. So my focus on the next trading sessions are probably gonna be looking at oil stocks. And my favorite right now, it's basically Oxy. Oxy is my favorite, but I know XOM has a setup as well. Let's jump into XOM. XOM, I wanted to join longs yesterday, in fact. I wanted to long joins on yesterday. So we did tag the rejected the daily 50 and got support at the daily 20. So it's between those EMAs right now. I believe on the weekly. Yeah, weekly we already took out the prior weekly highs and we could head towards the weekly 20 MA. So there's a possibility we could go into 105 plus. 105 plus on a good candle. Like if we start going above the daily 50, I see this next level, which is another range area highs, as a possible test. So I can see a day trade going on with oil, something like this, with XOM, something like this. So I can see it happening. A key point for a trade like this will have to be an open above or around the prior day highs. And keep in mind that the last swing high on the daily was this right here, 103.90 something, 103, almost 104. So keep that in mind, that it could just merely make a poke off of this and then drop. So always keep that in mind. And that's why Oxy, I think, is better. And I'll show you Oxy right now, because I see a little bit of danger on XOM. Not danger, but walls. It has walls, and Oxy has more of a magnets to the upside. When you day trade, what do you look for in contracts? Well, if I think on XOM that 105 can hit, I'll be looking to get the 105 calls. Let me see. XOM. Yeah, around the 105 calls. If I can get something out of the money in be in the money, that's the contracts I look for. I try to go no less than 20 delta. And yeah, and weeklies. Weeklies, my friend. Modal, you're wearing the VIP for a month, I think. We do weeklies, my friend. Every time I do 2-3 weeks out, I regret it. Nah, not all the time, but sometimes it's more of a, sometimes I'm like, okay, I want to swing this, but my analysis, and you guys know it, it's mostly focused on looking into the next daily candle, maximum 2 daily candles. I don't know how some people can see so far into the future, where they can see like multiple weeks of candles, like what the certain stock is gonna do for multiple months or something like that. I don't know, but at least I can see setups that can expand for 2 to 3 days, at most. So we take weeklies. On Oxy, right here. Oxy right here. If you notice, it didn't have the same bullish session as of like XOM from yesterday, but today it did have it as well. So it needs some catch up on this name, and we are also looking to if we break this high, we're looking to break the series of lower highs with this one, which was a break in this high right here. There was a nice hold of the daily 20, a nice hold of this area right here. And I can see this being a bottoming pattern. We also have a gap to fill above. We have a gap to fill below, so just keep that on watch. You know that there could be some failure to fix the price right here and then go back up. But right now, I can see this possible flag breakout. We know that the rejection was at the weekly 20, but yeah, I can see a hot dog coming in, going even higher. So and going back to the expirations and all the stuff, like I think it can hit 62. So possibly it's better to grab something like 61 calls, right? So 60 60 right now. I think it can hit 6150 or 62. Let me see into 61 calls. Boom, get them in the money. And they're cheap. 61 calls right now at 29 cents. Let's see what they are tomorrow. But I like it. DBN. DBN is another one of my favorite stocks to trade. 40 something dollars stock. I think we missed this candle, but we want to see, like I said, this is day one of breakout. We want to see if we get day two, you know. We want to see day two. So possibly DVN can be a trade right there as well. Another oil name. C says, can you repeat the call buy an expiry again for the 61? I mean, if it's a day trade and if you know how to catch a move that from the open and stuff like that, then I will. I mean, I don't see why not just buy the Friday expiration, right? It's for Oxy, yeah. So tomorrow I'm probably gonna trade 61 calls on Oxy. And it has to have the right opening, has to have the right pre-market, and like DVN for example. Let's do a little bit of analysis on DVN. DVN, any pre-market above this high right here is acceptable for a trade. But if it's a open above this area, it's most likely a buy from the open. If it opens around this area, I will probably have to wait for it to tag something like this and then bounce. If it's open around this area, I will have to probably buy it at the open. So it just depends, right? And then I judge, whoever is moving, and then okay, let's get in or not. Not necessarily every trade is gonna be a winner, but that's the idea, right? That's the idea. DVN. What's another one? What's another one? MRO. No, like this one. Like you have to pick and choose your energy names. Yeah, they're energy, they're oil. They might move together. They might be great together, but the MRO doesn't have the same patterns, you know, that I like on DVN or Oxy or XOM. So let me check first. C's suggestion, which is UNG and Boyle. So let's go to natural gas futures real quick. That chart, it's a little bit hard to analyze because I mean we've been on a very steep downtrend from last year. A lot of consolidation last year, but the year before it was such a steep downtrend. Everybody trying to catch a bottom for natural gas. We see it recovering the daily 20, hitting the daily 50 at the highs. Weeklies, we're about to hit the weekly 20. So I wouldn't put a lot. I mean, I do see it's having its kind of trend reversal, but this could be a bear flag. This could be a bear flag because unless you're having candles closing about the weekly 20, I could see upside to the 50 or so. But as of now, natural gas can hit a ceiling and then break that flag to the downside. You know, so careful on natural gas. Thinking to the upside, that one's a little bit, like I said, that one's a little bit hard to analyze because since it made these huge moves and then drops like this. I remember back here, everybody was on Twitter and everywhere like, "Oh shit, we're gonna buy the bottom of natural gas. It's gonna give us a lot of gains." Everybody buying futures, UNG contracts, Boyle contracts, and knowing that those Boyles and UNGs are ETFs that they basically decay. You know, they're gonna go lower than the, you know, leverage ETFs are gonna have a decay on it, and these ETFs like this, I don't know what the components are, but they're mostly have different oil, natural gas futures contracts with different expirations. So depending if you have contagion or backwardation on the futures contracts, you'll have some fluctuations of price on these ETFs. You know, depending if you have a higher volatility on the short term or versus the long term, stuff like that. Um, yeah, weekly, possibly. Since we already have some kind of counter trend reversal, I could use the fibs anchoring from here, which is 7.56 into the lows of 4.5, and see if there's any confluence with some kind of EMA, which is right now is a weekly 20 EMA right here. So I can see gas possible upside or natural gas on UNG into the 6.02. At least, you know, possible. We recover the daily 20, so there's a possibility right there. I will watch for the daily 50 because it's also hitting at the 32% retracement. As for Boyle, it's gonna look very similar. Um, it's gonna look very similar if you notice. I'm gonna use the same analysis. Oh my god. You know, they just decay, decay, decay. Boyle, it's because I don't know. It's an ultra long, right? So it's a leverage one. I would probably look at UNG instead of Boyle. I don't know what the components are, but you probably on shares are good to trade this. I might aim like recovering the daily 20 like this. My aim could be the daily 50 for futures levels. 39.08 or so, 39.11 or so. I'm not gonna answer Modal's question because he left. Boys. He wanted NEE. Nextera Energy based at the daily 20 doesn't look bad. And yeah, this could call for expansion to the upside like this. That's good consolidation. Increase in volume about the daily 20. This looks like it's a changing trends, bottoming somewhere around that area. I could see a poke of this high and to test this low right here. Let's see the weekly. Well, train about the weekly 20. That hasn't closed above it, but it looks like it wants to. It had its rejection already, and it looks like it wants to hit higher. So I see the possibility of testing 65.36 again. This area low right here, especially because the market likes to do little pokes of highs. So it already has this high. It makes a little poke. Boom, test this, reject again. So there's a possibility of an upside trade. I'm gonna put it on my list, Model, because it does look interesting. I like this based on the daily 20. Thank you, sir. Especially if you think like the technology can stay bearish. Technology can stay bearish. Money rotates usually into defensive sectors, and Nextera is like 17 to 18% of XLU. XLU is utilities and utilities. It's a defensive sector, like by default. Okay. Next up is NRG. I don't know what that is. Doesn't sound like I know what that is. Possible to down to up in a trend higher. At day trade triggers if you break prior of these highs for a new high. But extended from the daily 20. You don't have an ideal entry. You would like to see something like this, right? Pull back into the daily 20. Boom, join upside, daily 20. Boom, jump upside, daily 20. Consolidation, upside. Right now it's extended. So give me 1 second. All right, I'm back. Sorry, my apologies. DTE. It's another. Is this? Oh, energy is another energy name. DTE. What is that? DTE energy is. Are you just doing energy names? um, there's better setups out there, man. I think. I do see the consolidation. This attempted to do a breakout. This candle should have taken it higher, but it only went to fill the gap and rejected. So this area right here, unless tomorrow is trading at this price right here above 112, probably stay away from it because this looks like it was a fail. This whole 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles of consolidation for doing a breakout that doesn't take you anywhere is not, it's not very good. That should give you an expansion, considerable expansion to the upside. That many days trading sideways. Yeah. Yeah, there's probably better setups out there, and those names probably don't have liquid options, my friend. They most likely do not have liquid options. They're gonna have big spreads, so careful on those. Any other suggestion, guys, before I take off? Because my time is up. All right. No more suggestions. I'm gonna stop the recording right here.